If you're holding Bitcoin right now, I know exactly what you are doing. You are refreshing your phone every couple of minutes, observing the candlesticks, looking at the $90,000 price tag, and then caring about the stock market hitting all-time highs and thinking, did I buy the wrong thing? This question feels urgent when almost all global assets are pumping up, such as gold and silver around $4,300 and $70 per ounce respectively, and the SP 500 hitting all-time high in late 2025. Seriously, why is Bitcoin the only one bleeding right now while literally everything else is pumping? Is the moon mission officially console, or is this the greatest buy that you've ever seen? In this video, I will show you why and guide you how to use some tools to search for clues of whales on trend. Hope you can get the skills for watching. Most importantly, I'm gonna show you how an ordinary investor, a retail investor, someone like you and me, can actually make money in this chaos without losing their shirt. Hey guys, I'm Stevens. If you are here to level up your investment game and sharpen your market mindset, you've come to the right place. We don't just watch tickers here, we find the why behind the moves. Let's get into it. Layoffs, cutting expenses, reducing team size. These rules that happen in crypto industry. The crypto industry looks like a ghost town right now. We aren't just seeing a price dip, we are seeing a structural collapse. In the last few months of 2025 and moving into early 2026, we've seen the largest wave of layoffs in history. It's said that over 80% of top 10 exchanges, both of centralized and decentralized, encountering layoffs, are slashing at least 30%, 40%, even 50% of their staffs just to keep the lights on. And if you are an altcoin holder, man, I feel for you. Over 90% of the altcoins have seen their prices cut in half or worse in just the last 90 days. We've seen decentralized exchanges that were the next big thing just a year ago completely dry up. The CEO of a certain DEX was also rumored to have been arrested for soliciting prostitution. I know that guy's name, but inconvenient to tell you guys. Just know these things. It's okay. Total value lock is vanishing. It feels like the air has been sucked out of the room. But why? Why is this happening now when the economy seems okay? Here's the why they don't tell you on X. Most of these DEX and altcoin projects were built on a house of cards. During the 2024 to 2025 hype, these projects relied on inflationary rewards. They would give you 20% or 30%, even 40% yield. But they were playing you in a token they printed out of thin air. As soon as the new money stopped flowing in, the sell pressure from those rewards crushed the price. Once the price drops, the zero becomes worthless. The users leave and the DEX collapse. It's a death spiral. As for the layoffs, many crypto companies, especially exchanges, hired like crazy when Bitcoin was at $120,000. Now that we are at a range of $99,000 to $90,000. They realized they can't afford their fancy office and their hundreds or thousands employees, so cutting expenses is underway. Another reason is those ETF firms raiding their chips. According to a certain survey, the entire amount of Bitcoin of the whole ETF firms occupies more than 50%. So their behaviors can be capable of shaking the direction of the market. Doesn't mean that they are selling Bitcoin in the past period of time. Let's find out together. Here we can look at the information. The addresses are the top 100 richest Bitcoin addresses. Since the statistical and calculation process involves a large number of addresses, they will not be listed one by one. The final conclusion, including the total amount of Bitcoin buying in large quantities by the top 100 addresses within 30 days is 362,877 Bitcoin. The selling amount is 36,350.21 Bitcoin. This illustrates a point why ordinary investors have been viewing crypto as a disruptive force, whereas have been consistently buying. However, these two figures differ so greatly. Does this conclusion hold water? To verify this conclusion, we can example the data using other tools. Here we can use another tool, bitcointreasury.net. In the part of publicly traded Bitcoin treasury companies, we can see top 10 companies Bitcoin holding are rising. All of them are rising. Okay, let's see rank 11 to rank 20. Almost rising except Tesla. See that Tesla's curve is dropping down. And rank 21 to 30. Only Bitcoin groups SE is selling. That guy is from German. I think most of us all know that. Therefore, we can conclude that whales are primarily buying, with only a very small number selling. Since the selling volume is completely disproportionate to the buying volume, that's only one possibility. That is, native crypto companies and the old whales are selling. Compared to old whales, the new whales are actually holding steady. We aren't seeing massive dumps from the black rose or strategy. They are sitting tight. It's a massive transfer of wealth from the early adopters to the Wall Street giants. If you are selling now, you are likely selling your Bitcoin to a billionaire's pension fund. Crypto New World is building. The builders are all from Wall Street. They are achieving and developing what Trump said, make America the world's cryptocurrency capital, which was regarded by the native investors and companies as a joke a year ago. But now we are all seeing. Let's address the elephant in the room. Why is Bitcoin dumping while gold and stocks are pumping? Usually Bitcoin is called digital gold, right? So when gold goes up, Bitcoin should follow. But lately, that hasn't happened, and even opposite. Why? The liquidity trap. Bitcoin is now a high beta asset. When big investors get nervous about 2026, they sell their most volatile stuff first to cover their losses elsewhere. Bitcoin is the world's biggest ATM. There's a new word, high beta asset. A high beta asset is a stock or investment that exhibits greater price volatility and sensitivity compared to the overall market, meaning it tends to rise more in bull market and fall harder in bear markets, offering high potential rewards but also greater risk. A beta value greater than 1 indicates this higher volatility, making it suitable for growth-oriented investors with high risk tolerance, often found in sectors like tech, financials, and industrials. ETF fatigue. The initial hype of the spot ETFs has cooled off. We are in the boring middle, where the hype is gone, but the long-term adoption hasn't fully kicked in. But Bitcoin is fundamentally different. Unlike the dollar, nobody can print more Bitcoin to save the market. Every time it dumps, the supply on exchanges gets tighter. I'm calling it now. The great disconnect won't last. Bitcoin is a coin spring. While the world traces a bubble in AI stocks, Bitcoin is building a floor. History shows us that Bitcoin usually lags behind the stocks market by about 3 to 6 months. If stocks are pumping now, Bitcoin's turn is coming. So is Bitcoin a good asset for 2026? Yes, but only if you have the stomach for it. If you're an ordinary investor, or we call retail investor, don't try to time the bottom. You miss it. Instead, looking for these 3 triggers to start scaling in. 1. The AI bubble correction. When people realize that not every AI company is worth $100 billion, their money is going to look for a new home. Crypto is the natural pivot. 2. Rate cut certainty. Once the Fed or your local central bank stops playing games and starts consistently cutting rates, risk on assets like Bitcoin will fly. 3. The quiet phase. The best time to buy is when nobody is talking about Bitcoin on the news. We are entering that phase right now. My 2026 strategy is, I'm not all in. I'm keeping a cash reserve. If Bitcoin hits the $75,000 to $80,000 range, that's my golden zone. But remember, I'm looking at a 5-year window, not a 5-day flip. We are in a bull market, but it doesn't look like 2021 anymore. At that time, everything went up because of Dogecoins and memes. Considering the driving motivation and the investment style of new giants differ from before, I think 2026 bull market institutional era. It's slower, it's more calculated, and it's tied to Wall Street because of the ETFs. Bitcoin is now part of the global financial plumbing. This means less 80% crashes, but also fewer 100-time giants overnight. It's becoming a major asset. You have to trade like one. So we are losing Bitcoin if not a holder. Before I let you go, I will give you 3 principles to live by if you want to survive in 2026. 1. Risk management is king. If a 30% drop in Bitcoin makes you lose sleep, you are over-leveraged. Keep in mind, your sleep at night factor is more important than any chart. 2. Risk to reward ratio. Don't trade a coin that has already pumped 500%. Look for the ones that are fundamentally strong but currently bleeding. Buy the blood, sell the hype. 3. Don't fantasize, seize. Stop dreaming about the Lambo by next week. That's how people get rich. We can't go back to the opportunities that we have in 2020. Don't take chances on moonshots. Seize the chances that the market gives you when everyone else is scared. The people who made serious money in 2020 weren't the ones tweeting to the moon, were the ones quietly buying when the headlines said crypto is dead. 2026 is going to be a wild ride. If you want to stay ahead of the curve, make sure you watch all my videos and you will definitely get some valuable insights. Finally, let's recap the entire video. Here's what you should have learned today. The reason why Bitcoin is bleeding right now, who the major sellers are and who the buyers are, why we are witnessing a massive wealth transfer between old and new wealth. For the ordinary retail investor, what can we actually do in 2026? The golden rules of surviving this market cycle. I truly hope everyone improves their investing skills and making a fortune in 2026. Of course, this is just my personal opinions and not financial advice. I just really hope that we face a big bull run soon. Okay, what do you think? Is crypto dead? Or is this just a massive trap for retail investors? Let me know in the comment below. All the links to the raw data and tools I mentioned today, I will drop in the comment areas. Feel free to check them out. Alright, I will continue following the finance trends including stock, fund, crypto, gold, and real estate, etc. I hope you found this helpful for improving your investment skills and mindset. If you enjoyed this video, please give it a like and subscribe so you don't miss any future videos. Thank you so much for watching. Catch you in the next one.